Move forward and talk a lot more about markets as well. Rohit Srivastava, who is the founder of Indiacharts and Strike Money, is joining us now to discuss the technicals, the top sectoral bets, and a lot more. Rohit, good morning. Thank you so much for joining in. What's happening with the Indian markets? We are not following what's happening globally. But do you think there is a support that the traders should be watching out for? What are the next important levels on the Nifty that you're targeting?
So we've seen our market diverge, I think, from the rest of the world for quite some time. And interestingly so, unlike last year, we are diverging on the way up and not on the way down. Both in October, when the US was seeing a correction, we didn't fall too much. And I think we are seeing the same thing now. Last week, we were a bit off. Again, we've taken off to a new high in the last 2-3 days. Today, I think we are taking support close to 26,000, 26,050. Those are intraday support levels. If those continue to hold, I think we should continue to march forward in the coming week. First to, of course, get past the all-time high, which is 26,270. But eventually, I think we are headed towards 26,800 in the coming weeks. And that is where I think we'll be headed. So all-time high is not very far. I think they are coming. We just need to hold this support intraday for the day. We will also be closing positive for the week, if you notice. So even though there is some intraday weakness, the weekly charts are also going to continue to look good.
Rohit, morning. Thank you for joining in. You're saying all-time highs continue in the next few weeks, but the big contributor to this move that the Nifty has had from levels of around 24,500 to where we currently stand has been the Nifty Bank. And there was conversations about the index going towards 60,000. It's very close to that now. What next for the Nifty Bank? The longer period charts, does the index take a bit of a pause once it gets to 60,000, or do you see those levels still being some time away?
I think 64,000 is what we still have on our charts. So that doesn't change. This is just, I guess, some near-term pullback because it's been a performer. It's also hit all-time highs ahead of the Nifty. So it calls for some correction pullback. Will it be significant is a little early to say. I think the key support, the initial support is going to be at around 58,600. So if that doesn't break, we're all good. If that does, then it's possible near term you do see a further setback in banking relative to the market. But something to keep in mind is that our market's always been about rotation. We've seen different segments of the market do well, others pull back, then others do well. And I don't think that is going to change anytime soon. So we shouldn't be too worried that, banking that has led the way so far pulls back. Something else that has already pulled back can lead the way again. And there are many, many leaders that we have, in the market.
Which are the other sectors you think could lead the markets from here on, Rohit? Is it purely based on technical terms, or do you think the fundamentals are leading to that up move that you'll see going forward?
So it's a mix of both. On the technicals, I think interest rate sensitive sectors are anyway looking good, which is your autos and metals. So the metal sector, for example, has already pulled back in the last week or two. And we are back to close to, the 40, 50 week averages, which are good supports for another leg up to start. This would also end up getting supported not just by the rate cycle. It would also be supported by probably weaker dollar. It has been heading up for a while. But I sense that as the US rate cuts get closer and closer, the US dollar will start, ticking on the other way and the commodity cycle picks up again. We've already seen prices of aluminium, zinc, and even steel more recently starting to pick up. So those are good signs that the underlying current in the commodity prices is there with us, and that is why I think metal stock should do well. Autos, of course, there have been multiple triggers from tax cuts, GST cuts, and the rate cycle. All of that comes together, and I think it's few of the indices which is positive today. So it is holding out. The others, I think, would pick up as well as time goes.
What about IT, Rohit? It's been the yo-yo or the ping-pong ball in all of these global developments. Anti-AI trade, pro-AI trade. With the US not doing well, India does well, and vice versa. Would you stay away from a sector like this, or do you believe that the correction has been good enough to give you an attractive entry point?
So there are two parts to IT. One is the trade and one is the investment. So as a trade, I think it got oversold. It's already reversed, and we are putting out some trades on some of the IT stocks. But the upside may be limited to that 5-10%. The IT index goes up to a 40,000, and then how much more? The problem really is that when you take a 1 year, 2 year outlook, then you're going to have a very, very different view of things. Which stocks would you really want to be in? And my answer is I'd rather buy growth stocks that are growing earnings at 40-50% and are available at a P/E ratio of 25 to 40 than end up with an IT sector which is growing earnings at 5-6% and is behaving more like a defensive sector. So you're not going to get those multi-bagger big return outcomes from IT. Usually funds own it because they need to diversify. But if you're an individual investor who's more concentrated, then you would be avoiding defensive sectors like IT, FMCG, or
Okay.
pharma.
So you are saying that defensive like FMCG and pharmaceuticals also should be avoided at this point in time.
That's right. Those are places where you may see returns, but not more than what the market has to offer. That is going to come from either the interest rate sensitives in the large cap, the commodity cycle, maybe oil stocks, or it will shift towards a lot of mid and small caps where, because of the ongoing growth, valuations have actually cooled off, and search for those pockets, and that's where you'll get the big returns.
You mentioned metals will do well, Rohit, but is there any other sector that you are expecting to do well beyond the metal space?
I think IT, metals, banking, and autos, those like on the rate sensitive side. But if you move outside of that, I think the energy and defense spaces still continue to attract attention. Some of these stocks are very close to support levels, have picked up momentum. And I think those are, you see, the thing with the bull market is that the winning sectors don't go out of favor. They just continue to remain in favor. So a lot of people try to call out that they'll go out of favor, but I think, energy and defense are going to remain in favor.
Okay, all right, Rohit. Thank you so much for joining us. Always a pleasure speaking with you. So that's the outlook on the markets from a technical viewpoint and how individual sectors could perform as well. We'll slip into a short break for now. Up next, we'll focus on the crypto market with Manisha Gupta on the other side.